Well, the fact that Tesla is still even in the top 25 is pretty shocking because this is a company that had layoffs. One of the things we're looking for is job growth. It's one of the requirements. People that work at Tesla love working there. There are fewer of them than there were. And I think one of the things we've seen in this list is that there's a massive lag in between the way that the people see the brand or the way that they're attracting headlines and when job seekers want to go work at those companies. So typically, job seekers still want to go in, even when a company's getting through negative news cycles. We don't see any slowdown in hiring or people looking at jobs or trying to get into the companies. A few years later, suddenly that hit starts happening.
You see companies move up, like Alphabet as well as Facebook.
Yeah.
Amazon moves down 2 notches. Is it more about Facebook and Alphabet doing better, or were there reasons why Amazon went down on the list?
These companies are so tight. It really is. It could be any of them, any time in the year. They've been the top 3 since we started this list. We're in year 4 now. One of the surprising ones is Deloitte hitting the top 5. So you've got these big tech companies known for, treating their workers incredibly well and free snacks, and they teach you all these great skills.
You don't
Deloitte.
think accountants can be nice to their employees?
I think that we now know that they can be incredibly nice. They move you around, they train you. One of the trends among all these companies is that people are looking for skill development. They want to go to companies that are going to train them because no one's sticking around for long at any one of these companies. Millennials will change jobs about 3 times as much as the baby boomers. And so they're not getting married to these companies, they are dating. And so with Deloitte, you go in, you date for a little while, you learn what's going on, and then you move somewhere else. You get all kinds of great skills. You get to say you worked at Deloitte. That's really promising for job seekers.
The banks fluctuated a little bit. The media stuff was interesting. Disney fell out of the top 10. Comcast slid 2. Any particular reason?
I think that all of those companies, again, this is another example where it's pretty shocking to see them on this list. And I think a lot of it has to do with who they're hiring and the way that the investments they're making in streaming technology, in all of the entertainment-related properties, people wanting to work at these entertainment properties, and that they are all, if you look at who they're competing with, everyone is competing in the same market for the top talent. And the entertainment companies are having to try to poach from Facebook and Google and all of these other places that are paying a lot more in some cases, or giving their workers all kinds of perks. The fact that Comcast, Disney, et cetera, are able to get that talent is a pretty big testament to them keeping up.
Uber's number 6.
Yeah.
What happens once a company goes public and people have made their money on the IPO price, et cetera? What's the track record of some of these companies on the verge of going public?
It's a great question. So we're seeing a couple of them fall off and a couple of them stay on, but there is no question that there is a rush to get into these companies before they go public. And so there are 4 companies right now that are on the list that we're waiting to see go public. Next year will be a real test to see whether Pinterest and Lyft stay on there. Airbnb, yeah. Exactly, Uber, so very interesting.
Lyft made 19 this year, and it wasn't even in the top 50 last year.
Yeah, exactly. Wow. Yeah.